Ladies and gentlemen, good day and welcome to the TVS Motors Limited 2Q FY23 post-result conference call hosted by Batliwala & Karani Securities India Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Annamalai Jayaraj from Batliwala & Karani Securities India Private Limited. Thank you and over to you.
Thanks, Mike. Apologies for the delay in starting this Concall. So welcome to TVS Motors 2Q FY23 post-result conference call. From the management side, we have with us Mr. K. N. Radhakrishnan, Director and Chief Executive Officer, and Mr. K. Gopal Desikan, Chief Financial Officer. I will now hand over the call to Mr. Radhakrishnan for the opening remarks to be followed by the question and answer. Over to you, sir.
Good evening, and thank you for joining us today. Sincere apologies for the delay in starting this call. Season's greeting to all of you and your family members and your team.
The operator, can you hear us in the management?
I think we have to reconnect them. We could not hear.
Please stay connected. We will reconnect the management.
The person you are speaking with has put your call on hold. Please stay on the line. நீங்கள் பேசும்
Can you
Yes, sir. Yes, sir, we can hear you. Over to you.
Good evening. This is KNR. Thank you for joining us today. Extremely sorry for the delay in starting this call. Season's greetings to all of you and your team and the family members of your team. I'm extremely delighted to share that the company first time recorded over 7,000 crores of revenue and EBITDA over 700 crores and profit PBT over 500 crores. Revenue is 7,219 crores, EBITDA is 737 crores, PBT is 549 crores. It is very glad that we have launched the TVS Ronin during this quarter. Company's scooter brand TVS Jupiter achieved a new milestone by crossing the 5 million mark, and we are extremely thankful to all our customers. We have launched the TVS Ronin, the first modern retro motorcycle, which received an excellent response from the customers. TVS Ronin comes with versatile features combined with unique design, modern technology, stress-free riding experiences across all terrains. The motorcycle has got one of many firsts with impressive technology, convenient features like dual-channel ABS, voice assist, and enhanced connectivity. During the same quarter, we have also launched the series of iQube products into the market. They are all very well received in the market. Now, with respect to Q2, during the quarter, the company's operating revenue grew by 28%. This quarter is 7,219 crores, vis-a-vis last year's same quarter of 5,619 crores. The domestic two-wheeler market company sales grew by 21%, 7.25 lakhs against last year's 5.99 lakhs. And please note that industry during this time grew by 12%. International market, we sold 2.52 lakhs against 2.7 lakhs during last year. The industry decline was 14% and our decline was only 7%. I'll give you more details about the reason for decline. The two-wheeler sales grew overall 9.77 lakhs against 8.7 lakhs. We grew by 12% when the industry grew by 6%. The domestic sales numbers include 16,000 units of electric scooter, but what is most heartening is during the month of October we have delivered more than 8,000. So month after month we are able to ramp up better and we are able to deliver, and we have very good booking of iQube. Three-wheelers, we are at 0.5 lakhs units as against 0.47 lakhs during last year's Q2. EBITDA for this quarter is 737, grown by 31% compared to last year's same quarter of 563 crores. Company registered an EBITDA margin of 10.2 against the 10% margin during last year. This EBITDA was delivered despite challenges in the international market due to economic slowdown and higher inflation. So we moderated the dispatch because we always believe in keeping the right stock in the market. In the domestic market, we have launched TVS Ronin, and with better availability this quarter, we were able to put higher investments in marketing. Because that is very, very critical because we are building brands, and also iQube is supported with marketing, and being seasoned, we have put extra money on the marketing side as investment. As a part of the EV strategy, we have also taken extremely specialist areas of specialized resources in the areas of software, electronics, digital analytics. This is one of the important things, that is why the employee cost has gone up. Even though in the premium motorcycles the ramp-up was better than Q1, still we couldn't meet the full demand due to non-availability of certain portion of semiconductors, which is becoming better in the month of October, November. We expect the supply constraints will ease out in Q3. The PBT for the quarter grew by 46%, 549 crores as against 377 crores during Q2 of last year. The profit after tax grew by 47%, 407 crores as against 278 crores during Q2 of last year. On EV, as I said, month after month we are able to ramp up, and what is heartening is there is an opening booking of more than 25,000 as I speak. Q2 we were able to deliver 16,000, which is much better than Q1, which is 9,000 this year beginning, and our Vahan share is also going up 2.9% last year to now 9.9 almost. With better availability of parts in Q3, we are confident that we will cross the 10,000 mark, and then we will go towards the 20,000 mark in Q4. Currently, iQube is available more than 100 cities, towns in India. Excellent response. We have continuously expanding our capacity, and thanks to the supply chain, they are also supporting us. As I said earlier, we will be launching a series of new products in the coming quarters to have the complete portfolio between 5 to 25 kilowatts in the next quarters to come. And we have widespread access in the network with Tata Power, CESL, GeoBP, and this will definitely enhance the customer convenience much more. On the new product side, for the Diwali season and Puja season, we have given many variants and many new products. All new 2022 TVS Apache RTR 160, RTR 180 with more power, ride modes and smart connect. The new motorcycles are lighter, faster, tech-loaded with enhanced performance. The motorcycles will come fitted with Bluetooth-enabled fully digital instrument cluster and smart connect. They are all adorned with fresh, attractive graphics. The new Jupiter Classic launched to celebrate fastest 5 million vehicles on the road on Jupiter, and new TVS Jupiter Classic recommits to the consistent delivery of Zyada Ka Fayda. TVS Raider has now become one of the most loved motorcycles since its launch last year, and it continues to wow its riders. TVS Raider Smart Connect TFT variant launched with first-in-class features such as TVS TFT display, TVS Smart Connect with voice assist, Bluetooth connectivity, navigation, ride reports, and multiple ride modes. I'm pretty confident that this is one of the brands which are becoming super hit in the market. NTORQ 125 Race Edition now also comes with marine blue color. Very good feedback from the market, and the new quarter also features checkered flag race inspired graphics. Season has gone well for us, and during the season, company has done well. We are very confident that the rural market has started improving. Now, with the improved availability of semiconductors, we are expecting practically able to meet the demand of Raider and the premium products coming forward in Q3. In terms of international markets, I think there is a slowdown, very visible economic slowdown, currency depreciation, high inflation in certain markets. So we are moderating the dispatches. The retails have started picking up now. Our retails are much better than what the dispatches are, but we always believe in the right stocks in the right country. Even in India, post-season, we have less than 1 month stock. That is always our strategy, and all are cash and carry. Q3 and Q4, you will see new products getting introduced. Closer to the launch, I'll give you more details. You have seen definitely the TVS CS has been very good in supporting the retail finance, and TVS CS also has done extremely well. And this has been helping the two-wheeler growth. With a strong portfolio of brands like Apache, Jupiter, Jupiter 125, Raider, NTORQ, and our Star range, HLX and Radeon and TVS King, and the recently launched TVS Ronin, which is doing extremely well, we are confident that we will grow ahead of the industry both in domestic and international. We have invested especially in the area of marketing with the launch of products, and we have also invested in future technology areas. We have added competent people in digital electronic software because they are fundamental to delivering our strategy on the EV side. We are pretty confident that quarter after quarter, with revenue growth, increased premiumization, continued cost reduction initiatives will lead our sustained EBITDA better and better. And we will continue to deliver more and more EVs. October we have already delivered 8,000, and you will see that going to 10,000 this quarter, and then in Q4 we are confident that we will go closer to the 25,000 mark per month. Thank you.
Thank you. We will now begin the question and answer session. Participants who wish to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. We have the first question on the line of Chandramouli Muthiah from Goldman Sachs. Please go ahead.
Hi, good evening, and thank you for taking my questions. My first question is just on the other expenses line. It looks like we've had a good bump up in revenues quarter on quarter, but sort of maybe because of higher other expenses than expected, the margins are still flat. There's not so much operating leverage visible. So just trying to understand what drove the higher other expenses, and is this the run rate to keep in mind going forward as well?
See, the other expenses, like I said, there were new product launches, and the marketing expenses gone up during the quarter. And also we have added there are because of the variable expenditure, because of the turnover going up, that has also gone up. So that variable expenses is in line with the plan. Marketing expenses definitely, because when we try to put the launches, we wanted to make sure that whether it is TVS Ronin or iQube or some of the products what we have launched for the season, these are all investments because they are going to pay back going forward.
Got it. That's helpful. second question is just on the electric two-wheeler capacity. I think earlier you had mentioned getting to 120,000 units annual capacity and then sort of taking it from there. So it looks like we're already close to that 120,000 units annual manufacturing capacity on electric two-wheelers. Just wanted to understand over the next 12 months.
Yeah. We already have 120,000 capacity. We were not able to ramp up. But now we are pretty confident, possibly this month itself we will exceed 10,000. Last month we hit 8,000. Now I think thanks to all the suppliers, especially semiconductor, they're all supporting us. Like I said, we have more than 25,000 booking as of now when I speak. So the challenge is to now take it to 25,000 per month. And we are not present in all markets in India. So I think it's a good story. Our first challenge is to deliver this month 10,000 and then take it to 25,000 by March. So we are giving a lot of confidence in terms of this one, because 25,000 will go to 300,000. Practically annual run rate will be 300,000. So capacity we are now ramping up. The challenge is 10,000 we are pretty confident. Now the ramping up to the 25,000 is going to be the challenge, because there we have to get all the supply chain partners delivering. Demand, extremely happy on the demand side. I hope I have clarified you.
Yeah, that's helpful. And just last question is on the recent acquisition that we announced of a stake in N-Cars Mobility. So just wanted to understand the thought process behind that acquisition and any additional color on that transaction.
We have invested close to 40% in this company. This is basically a company which is involved in the pre-owned vehicle business, and that will give us help us to understand more the customer related requirements. It will help us in our development strategy. Also, it will help the TVS credit services, where the repossessed vehicles can be refurbished and sold, and also gives an opportunity for TVS credit service to fund the pre-owned vehicle business also. It is absolutely relevant and to the business activity of TVS Motor Company.
Got it. Thank you very much and all the best.
Thank you.
We have the next question from the line of Pramod Kumar from UBS. Please go ahead.
Yeah, thanks a lot for the opportunity, sir. I think just wanted some clarification around the investments what you've been making on the EV side in terms of employee costs has shot up quite a lot, and you did highlight that you've been hiring a lot of talent for the EV side. If you can just help us quantify either in terms of what the kind of size of team we are having, or how much of the incremental pressure, because we do understand that the EV business will get moved to a separate subsidiary. And if you can also share some timeline around that, this concern as to by when do you expect the EV subsidization to happen? And if you can generally guide towards the kind of cost hit what you're taking on EVs, which will be there till the volumes ramp up. So just help us understand how's the ICE portfolio doing. Just trying to understand the profitability on that count.
See, EV is the most important strategy, and as I highlighted, all the increases, we are not adding any more people in the ICE. In fact, all the addition has been either in the area of software or electronics or digital and analytics, all related to the future. And this is the future mobility requirements, and this is going to completely support the company in a big way going forward. And as I highlighted, we have in the next 12 quarters a full product pipeline, completely echoing what you have seen in the ICE side. So it is going to definitely help us in terms of delivering, because you need to put right people, and we need to have competent people who can deliver these numbers and platforms. So please understand that. So that is the reason we are investing behind that, and that will continue, because TVS, the most important thing is, even if you look at IQ, we are designing, developing many things ourselves, and we are also partnering with some of the suppliers. So the true spirit of Atmanirbhar Bharat is there in IQ. Okay, I can keep elaborating what all things we have designed and developed, and that is the strength of TVS Motor Company. So whatever we do in ICE, you will see one notch higher in terms of the people and the development and the kind of investments behind EV.
And sir, did I hear you right, talking about launches from next quarter onwards on the EV side?
Yeah, you will see definitely some more launches from our side. Quarter after quarter, there will be definitely some launches on the EV side from the company.
And is there a way you can quantify what the kind of additional cost you're carrying with, because there's not much of business there, but you're making the investment ahead of time or for the future. So just want to understand how much of this is not related to the ICE business, and this will kind of average out itself as the volumes ramp up, or when you do the subsidization. Just trying to understand how much are we the kind of as a percentage of revenue is the investments what you're making on the P&L side on EV stuff. If you can quantify.
What is most important is see how the revenues are going up month after month, quarter after quarter. And it is a combined ICE plus EV, and that is the most important strategy of the company. You keep getting the right brands which are super hit products, which requires investment, and you put the right people. See, for example, today, when I'm talking to you, I'm pretty confident that iQube is a brand which is likely to do more than 25,000. And this is the brand which we are going to also leverage globally. So we wanted to make, for example, Ronin. Their response has been wonderful, but that is on the ICE side. So whichever products we are putting into the market, it requires investment. So ICE plus EV, we are extremely happy that we are able to increase EBITDA both in absolute number and in percentages better and better month after month and quarter after quarter. That should be the way we have to look at it.
So in a way, you are reiterating that you, despite the EV ramp up, which will not be accretive, you will still continue to see EBITDA expanding and even the margins expanding from these levels. Is that understanding right, sir?
Absolutely. Overall, we have to grow better and better both in top line and in the margin.
And basically, sir, on the subsidization of the EV business.
We will come back to you at the right point of time. We are evaluating all the options, including carving out the new subsidiary. We will come back to you.
Okay, and sir, final question on the marketing cost for the auto business. Do you, because you did say there were launch expenses and all of that, so do you see at least those marketing costs moderating a bit in absolute terms for the remainder of the year, or do you continue to see that maintaining these kind of absolute levels for the remainder of the year as well?
I look at marketing as cost. I look at marketing as an investment. How do we take Ronin? See, I don't want to give the numbers what we are looking at, but there is a great brand. Ronin is getting is a great brand. iQube is getting is a super hit brand. So the way we have to look at is Jupiter 125. Raider, unfortunately, we had some challenges in ramping up because some suppliers did not support us. But it is shortest time we are able to deliver more than 25,000 per month. And consumers are extremely happy, and I can even take it to the next level. So I don't look at it as marketing cost. I look at it as marketing investment to build the brand.
Fair enough, sir, and thanks a lot for that. And Jessica, sir, during the course of the call, share the financials of the TVS credit business whenever you have time. Thank you.
I can tell you, I think TVS is doing extremely well.
I can just share some information about TVS Credit Service. First time we have crossed 17,000 at the book size. We are at 17,448 crores. And gross NPA is lower than the previous quarter reported. It's around 2.8%. And we are meeting the capital adequacy norms as required. On the profitability side, the profit for the quarter is 129 crores is the profit for this quarter as against last year's 35 crores. And the PAT is close to 100 crores. It is at 96 crores to be very precise. And we continue to hold 84.24% in TVS Credit Service. It caters around 44% of the requirements of TVS Motor two-wheeler financing.
Thanks a lot, sir, and best of luck. Thank you. I'll come back in the queue.
Thank you. We have the next question on the line of Kapil Singh from Nomura. Please go ahead.
Good evening, sir. Could you talk about the realizations? We have seen a very good improvement this quarter. So how much of this was price increases, how much was mix-led, and how much did you get from the currency?
See, price increases you're asking during this quarter, right?
Yeah, during September, and of course, if you've taken any others later on as well.
Yeah, see, during Q2, the price increases, we did, one second. About 1%. Overall, we have taken a price increase of 1%. And exchange, we got, I think, 0.3, 0.4, that kind of a benefit. remaining all coming from material cost reduction. Because if I look at Q2 to Q1 of this year, so it's almost same level in terms of RM. So the overall price increase plus exchange benefit plus cost reduction. Commodity increases have been there, as you know, more than 1.5%. So I think overall this is the breakup. And we did actually lose something on the mix. Okay, so mix is getting better now with better ramp up of Raider and premium products in Q2.
Okay. Sir, I was actually asking about realization per vehicle, the net sales per vehicle.
Realization per vehicle is about 70,000 rupees.
Yeah. So, was there contribution from better mix of spares also? If you could share that.
Spare parts is at the same level. I think we have done spare parts. Just a minute. Okay. Spare parts is at 670 crores for this quarter.
Okay. And sir, when we go forward, are you seeing significant benefits on the commodity front, or like how should we think about it? What are the
commodity is definitely softening. Going forward, we are also feeling that it has reached the highest level. So we will see moderation going forward in Q3 and Q4. The challenge, like I highlighted, some of the international markets, because of the economic conditions and because of the issues related to the Ukraine war, I think there is higher inflation, the currencies are getting depreciated. So I think the consumers are having little bit.
Ladies and gentlemen, the line for the management has dropped. Please stay connected. We will reconnect the management shortly.
Okay.
The person you are speaking with has put your call on hold. Please stay on the line. நீங்கள் பேசும் நபர் உங்கள் அழைப்பை ஹோல்டில் வைத்துள்ளார். दयவு செய்து लाइनिल काத்திருக்கவும். आप जिस व्यक्ति से बात कर रहे हैं उसने आपकी कॉल को होल्ड पर रखा है. कृपया लाइन पर
हेलो.
The person you are speaking with has put your call on hold. Please stay on the line. நீங்கள் பேசும் நபர் உங்கள் அழைப்பை ஹோல்டில் வைத்துள்ளார். தயவு செய்து லைனில் காத்திருக்கவும். आप जिस व्यक्ति से बात कर रहे हैं उसने आपकी कॉल को होल्ड पर रखा है. कृपया लाइन पर बने रहें. The person you are speaking with has put your call on hold. Please stay on the line. நீங்கள் பேசும் நபர் உங்கள் அழைப்பை ஹோல்டில் வைத்துள்ளார். தயவு செய்து லைனில் காத்திருக்கவும். आप जिस व्यक्ति से बात कर रहे हैं उसने आपकी कॉल को होल्ड पर रखा है. कृपया लाइन पर बने रहें.
Yeah, got it. Ladies and gentlemen, we have the management connected.
Hello.
Hello, can you hear us?
Yes, sir, we can hear you loud and clear.
Yeah. So, I don't know to what extent you were able to hear me when the call got disconnected, because it was okay from here, our side.
Sir, can you repeat from like when you were talking about pricing in the international market, how it has moved, and or how you expect it to move, given that you were mentioning something about commodity challenges, and also in the domestic market if you've done any pricing.
Yeah, I think commodities have reached the maximum, and we are seeing the commodity will soften and it will settle down in Q3 and Q4. And even I told about better ramp up of now the premium products and Raiders. We are pretty confident that Q3 the numbers will be much better. On the international, there are some challenges with respect to the economic slowdown, little bit of inflation and the currency depreciation. So we are mindful of that. Even in the month of October, our retails are much positive, but we have made sure that the dispatches are operated. This situation could continue for a couple of months, but I am pretty confident that from Q4 you will see a big change. But even in Q3, we will do better than the industry. Even in the month of October, you would have seen both in domestic and international, TVS has done better in dispatches and market share gain. While on the other side, you would have seen our Vahan share also going up. So, and we always keep the stocks very lean. In the domestic, we have around 25 days of stock. In the international market, similar type of 1 month stock maximum. So that has been the principle of the company. So we keep and you know that we are completely cash and carry. So all these are helping us to make sure that the working capital not only of the company, of the distributor, dealer, everything is managed pretty well. This was the point I was trying to highlight.
Okay, sir, I was checking on the pricing for international markets and domestic. How do you expect it to evolve going ahead? Have we done any price hikes or any currency pass-through we will do in international markets to support markets?
Pricing, we have done it based on Q2 when I said, I think about a 1% increase, both in domestic market and international market we have increased prices. And the currency we got about 0.4%.
I was asking about Q3, so October onwards.
October we have taken another price increase about 1.1%.
In both domestic and international?
No, domestic. This is domestic. See, price increase, we constantly look at opportunities, and depending upon the situation, we will look at it. Okay, domestic we have increased by 1.1. We will keep looking at it. Pricing is a strategy. We look at what is most important is, we have to grow ahead of the industry. And we look at the opportunities to also look at the cost increases and overall opportunity on prices.
Okay, I'll come back in the queue, sir. Thank you.
Thank you. We have the next question on the line of Gunjan Prithyani from Bank of America. Please go ahead.
Yeah, hi. Thanks for taking my question. I just had the follow-up on the margin again. So the bulk of the cost that you've seen here pertain to the launch cost, the increase that we've seen Q on Q. Now, I'm just thinking from a mix perspective, you indicated that this quarter has been positive. We sort of started to even see the commodity tailwinds in this quarter. Now, from here on, what is the incremental delta? I mean, I'm just trying to understand how should we see the margin performance.
Margin, as I committed to you, we will grow ahead of the industry, both in domestic and international, and we will continue to do better and better in margin. Okay, I may not be able to give you a guidance, but if I look at both in terms of absolute 549 crores PBT and 7,200 crores, both are the highest. Okay, so you will see with the kind of product range what we have and the initiatives whatever we have taken on premiumization, and also the focus on the launching new products, I think, and the range what we have, whether it is Apache, whether it is Jupiter or Ntorq or Raider, you will see us growing both in the top line better than the industry, and in terms of EBITDA we will grow quarter after quarter.
Okay. So just clarification, sorry, maybe I wasn't clear in my question. I'm just trying to understand, is the commodity benefit reflected to any extent in this quarter, or, we'll see that flow through in the second half of the year?
No, the commodity started softening, sometime in September. So you will see the benefits coming in Q3. Okay. That again depends upon the kind of quarterly lag, lead, whatever we have the agreement. So what is most important according to me is growing ahead of the industry, growing the revenue faster than the industry, and also EBITDA. And marketing costs are investments. For example, when Ronin or any new product when you launch, you have to make it as a super hit product. So that requires, you need to have that awareness creation. You have to say what are the positives of the product, and that's exactly what we are doing. But even if you look at the percentage marketing expenses is steadily coming down.
Okay, got it. And the other, two small questions that I had was on the festive. Can you give us some sense on how was the festive growth for TVS?
You can see the Vahan. We have done extremely well. We have gained market share ahead of the industry. We have grown ahead of the industry because now Vahan is very transparent to everybody. See, we have the Vahan retail. If I look at the festive season, of course there is a lead lag. But if you look at the festive season, also 36% in Vahan we have grown.
Mm-hmm.
So, but there is a lead lag. So what we are very much interested is, festive season is only one season. We want to continuously grow in Vahan quarter after quarter with the kind of product range what we have. So, we always look at not only season, we look at how do we grow ahead of the industry, how do we make sure that we keep lean stocks, So that exactly is the objective, and that has been done pretty well.
Okay, got it. And the last question from my side is on the semiconductor side. You mentioned that, this will start to ease, this is easing now in quarter 3. Can you give us some sense on, Raider, there's been a wait period, so what sort of order backlog we have, and, which will be the models where we can see a very significant ramp up going into quarter 3?
All new products we have seen very good demand in the market, and we are not able to satisfy the demand. So we will consistently look at where all we can ramp up, whether it is Jupiter 125 or the Raider or Ronin. I think this is part and parcel, and you know about iQube, I give some numbers. So all the new products, without affecting our existing products, we are able to build it. That is what is most important.
Okay, got it. Thank you so much.
Thank you. We have the next question from the line of Viraj from SMPL. Please go ahead.
Yeah, hi. Thank you for the opportunity. Just two questions. First is on the investment part. The quarter two last we talked about monetization or fundraising.
We are not able to hear you clearly. Can you again repeat your question?
Yeah, can you hear me?
Hello.
Hello.
Yeah, there is some. Yeah, repeat your question, please.
Yeah, my question is largely on the investments part. So we talked about fundraising plan for the NBFC. Either bringing in a strategic partner or an IPO. So any update you can provide as to where we are on that? And the related question is, we also made an investment in Rapido. We have close to 1 or 2% stake. So just trying to understand what is the thought process. So, last year we talked about investments peaking out and incrementally the pace of investment should kind of moderate going forward. But we keep on seeing this 100 crore, 200 crores kind of, bucket investments in these kind of ventures. So just trying to understand how should one look at investments for next few years kind of.
As far as TVS Credit Services is concerned, still we are evaluating, and we will come back to you on that, on the fundraise program of TVS Credit Service. With regard to all the investments, they are all quite relevant. And again, these investments are into the two-wheeler related, electric side related investments are only being made. And therefore, I don't think there is anything to worry about the investments what we have made so far.
I want to only repeat one thing. When we started Indonesia, that was an investment, and today it is giving huge returns. Same way TVS CS, when we started, it is giving huge returns. And all these investments, whatever we are going, are on the future mobility area. And EV is going to be the future. Okay? And right people, right kind of investments in the EV space, future mobility space, and also in the right region. So this is very, very critical, and TVS will continue to do that. But what is most heartening is overall with this investment we are able to grow our EBITDA faster than the industry. We are also able to grow the revenues faster than the industry. So what is most important is you have to invest, and you have to look at quarter by quarter. Are you growing ahead of the industry in top line, in the bottom line, and the EBITDA, both in absolute terms and percentage. So that is exactly what we are focusing.
So sorry, what I really meant is, so I understand these kind of investments we are making either to bridge gap in terms of capabilities or to kind of bridge presence into new areas existing. So if we kind of scan the old landscape in terms of say digital or EV or new technologies, post these investments which we have made, do we see any need for further, or we think we have kind of covered sufficient ground in terms of coverage, either in terms of capabilities or presence?
These are based on looking at the opportunities, and we have to seize the opportunity, because whether it is future mobility or EV space, we are at the beginning. We have one iQube here. Now we have to have many brands and many products going forward. If you look at our ICE business, there are segments, customer segments. Then there is also a huge opportunity to take it to both developing markets and developed markets. And how do we use this platform? So this investment will be based on the opportunity and the size of the market and the customer segments and the region basics.
Again, just want to add one more thing here. We are generating a very healthy free cash flow consequent to a secure cash and carry model. And therefore, these investments are made out of the internal cash generations. Just I want to make this clear.
Okay. And second question was if you can just give an update on some of the key acquisitions which we made, how have they performed, and the scale up of Norton. Thank you.
They are as per plan. Whatever we have indicated, they are all as per plan, and we are pretty confident that they will all deliver very good results going forward. My analogy is again TVS CS and PT TVS, and you will see now we have started iQube, and iQube makes a positive margin, and we are pretty confident as you improve your what is most important is from the customer side, they love iQube. So what is most important is create that pull from the customer, grow the top line, every line will follow in every investment.
No, okay. I meant more about SMEG or Ego, how is those been performing?
They are performing well. There may be some short-term challenges because Europe is going through some challenges. All of us know that. But, these challenges are not going to be permanent. Things will improve because if I look at Europe, there is huge inflation because of energy costs. All of you know that. There are some challenges because of the Ukraine war, and we are getting into winter. So, consumer sentiments are a bit low. But that's okay. These are, for example, I said about domestic and international market. Some of the markets, inflation is high, economic slowdown. We have seen it in the past also. And I think we are pretty confident that we will go through that and we will do better and better than the industry. And this investment will definitely give returns in the future.
Sure. Thank you very much.
Thank you. We have the next question on the line of Jinesh Gandhi from Motilal Oswal. Please go ahead.
Hi, sir. Can you share our USD INR realization for the quarter and exports?
You want USD, one second. I think it is 78, just 78.4 or 5, I think. Yeah, 78.4, Ganesh.
Okay, and exports? Export revenues?
Revenues, one second. Exports, revenue. 2,139 crores.
Okay. And how do we look at capex and investment for current financial year? I mean, first half capex had been about 320 crores and investment had been close to about 390 crores. So in terms of
capex predominantly it will be in the EV space. We are looking at this year most likely about 750 crores. But predominantly it will be in the EV space. This is on the capex side. And investments already basically told you. TVS CS, there may be some investments, and the other investments will be based on the customer segment opportunities and all related to future mobility.
Right. Understood. And lastly, would you be having your retail sales growth for the festive season? I mean, the data which you would be capturing in your system, not the Vahan, because Vahan comes with a lag. But in your system, you would be having the retail sales data for festive season comparable number growth.
We have done extremely well. Season has been extremely well, and we are opening with, I told you, less than 1 month stock after the season. And this month also, I'm pretty confident. In domestic market, we will do extremely well. We will grow much ahead of the industry. And you look at our dispatch numbers also, and I'm pretty confident with better availability of semiconductor, both in Raider and the premium products. I think Q3 should be a good Q3 for us. Only the case of international market retails are very good, but I am moderating my dispatches because there could be some challenges because of the inflation. So we are mindful about the stocks in the market, and we are very we plan proactively, and we make sure that it is planned much better. So overall, again, we will do much better than the industry, both in domestic and international, even in Q3.
Understood. Thanks for all that.
And I'm confident on crossing this 10,000 in iQube, because now better visibility of semiconductor. Now our important ability is to ramp up to 15,000 and go to the 25,000 mark, which we have internally set in March.
Sure. Great, sir. Thanks and all the best.
Thank you. Yeah.
Thank you. We have the next question from the line of A. Pirani from JP Morgan. Please go ahead.
Yes. Hi, sir. Thanks for the opportunity. Actually, my first question was on the fact that you have decided to issue a zero coupon debenture to your subsidiary. So just wanted to understand, this 310 crores you are raising to repay some existing debt, or is it for some other reason? And why are you issuing it to your own subsidiary? I mean, do they have a lot of cash? Just trying to understand.
Just to give a context, the subsidiary Sundaram Auto Components sold their stake in Sundaram Clayton USA, which we got the shareholders' approval, and they have realized money. That money is lying there. That's being upstreamed through a process of a zero coupon bond issue, and that's what it is.
And it will only improve the cash flow of TVS.
Yeah, this helps us a further cash inflow of 310 crores into the system of TVS Motor Company.
Just curious, wouldn't a dividend achieve the same result? I mean, is there some tax issue?
No. It's more tax efficient, and dividend depends upon the reserves position of the company. So since cash is available, that's being straight away upstreamed.
Okay. Fair enough. That's helpful. The other thing is that on the Norton side, we read some news that the latest version of the Commando was, I think, unveiled in the UK around a month back. So any updates if you can give as to, on the model launches, and when could we see those vehicles, as part of the volumes and revenue for that entity?
Products are getting ready, closer to launch. I'll give you more information, but you will see customers getting some products this year.
Okay. And just lastly on the Ronin, is there any indication that you can give on the if there is an order book or if there is a waiting? Because I think you have not been disclosing the numbers separately on SIAM for the Ronin. So any indication as to how the numbers are doing, what kind of a capacity you are building, and what kind of a demand you're getting for it?
It is going up month after month, and Ronin will definitely, since you wanted the number, I'll tell you last month we did about 3,500 numbers into the market. Month after month you will see, because we don't sell it through all dealers in India, and we don't want to also. We want to sell it through select dealers with Ronin, and this will do month after month better and better, and it is going to be another super hit product from TVS. We are pretty confident. The initial feedback from the customers are extremely positive.
Great, sir. That's helpful, sir. Thank you for the number, and I'll get back in. Thank you.
Thank you. We have the next question on the line of Pramod A from InCred Capital. Please go ahead.
Yeah, hi, sir. So if I had to look at your console numbers, which is there on page number 13 of the 29 page press release, there seems to be a difference of almost like 90 crores between in the automotive operations for console versus standalone.
Mr. Pramod, would request you to kindly go on the handset mode. Your audio is a bit low on the call.
Can you hear me?
Yes, now it's much better.
Yeah. So this is with regard to our console automotive profits. They are almost around 90 crores lower than the standalone. Traditionally, they used to be 20-40 crores below the standalone numbers. Is there any one-off losses in your subsidiaries which made this gap much wider this quarter? And what's the outlook on the same?
I think the way we have to look at consolidated is quarter after quarter, are we doing better and better? If I look at quarter after quarter, we are doing better and better. Overall now we are at 494 crores. Okay, Q1 was 408 crores. Q2 last year was 369. So I think the way we have to look at this, because all this consolidated, when we look at it, these are all investments for future. So that is the way we have to look at, because please understand, whether it is some of the investments, whatever we have made in Norton or some of the digital, they will take time. They will take time to start contributing, but the same principle of whatever we have invested in the past, it has started giving us very good returns. So overall, the way we look at it is consolidated, are we improving quarter after quarter? And it is improving. So these investments, whatever we have done in the past, okay, whether it is in Norton or any other area, you will see going forward with the sales starting and with the revenues happening, you will see quarter after quarter the overall consolidated profits also will go up.
Sir, I partially agree with that, your long-term vision. We were just worried about is it a start of a new hole or is it a one-off which has happened and which you will be able to plug in immediately?
So I said these are all investments. Okay, these investments are going to fructify in the future. Okay, it's exactly like the other question on Ronin. You invest and build a brand. Same way, all this investment, whatever we are made, overall as a company, quarter after quarter, consolidated is going up. Revenues are going up. So that is the objective. And these are future areas of investment, mobility. We are putting people, we are adding technology, we are investing in R&D. The more and more you start realizing the sales, similar example of, iQube, okay, there is demand. So the more and more we are able to deliver iQube, the more and more overall consolidated will go up. So that is the way we have to look at it.
Sure. Thanks and all the best.
Thank you. We have the next question on the line of Chirag Shah from Nuvama. Please go ahead. Chirag Shah, can you hear us?
Yeah, thanks for the opportunity. Sir, I had a question on the product launches that you have planned last.
Mr. Chirag Shah, there is a lot of disturbance coming from your line. We request you to please go on the handset more and speak.
Hello, am I audible now?
You're audible, but there's a lot of background sound coming along with it.
Okay, let me just. Is it better now?
Yes, this is much better.
Yeah. So, just a question on product launches. The last few years, you had a wonderful run. You have identified the product gaps very well. So, from here on, given that you have plugged in a good amount of white spaces, how do you look at the product gap across spectrum, be it motorcycles, be it scooters, be in terms of price point, in terms of engine sizes? If you could elaborate, it would be helpful.
See, this is going to evolve. For example, when we came up with Ntorq, when we came up with the Jupiter 110, okay, at that time Jupiter 125 was not visible. But then we found that there are set of customers who wants to upgrade in Jupiter itself. So that is why the Jupiter 125 came. And Raider, all of you know that we never had a product in the 125cc motorcycle. Now that has come. And Raider is a great product, not only for domestic market, international market. And TVS Ronin, it is a completely new product in the new area. And we have positioned it, into a new category itself. And that is going to grow. So to me, I think keep constantly looking at the customer segments and keep looking at what kind of opportunities are there, and we are able to see the opportunities. I may not be able to give you exactly guidance which areas and what we are able to launch. Okay, but going forward, still there are gaps, there are opportunities, white spaces, and TVS will continue to invest because our strength is understanding the customer segments and delivering something which is really a super hit product.
Yeah, thank you very much, sir. Yeah, and sir, just a follow-up question on the previous participant on this losses in automotive subsidiaries, the way the segmental is classified. Just to understand that, how do you look at it? There has to be some benchmark that you would have beyond which the quarterly reported losses at EBIT level shouldn't go up. So how do you look at it, or any further segmentation you do that? What kind of losses are bearable or acceptable for you for next 3-year perspective, and what kind of losses is what you are keeping a track of very closely? Because this number seems to have gone up from 60 odd crores seasonality wise to even 90 crores now.
Yeah, but please look at the revenue growth. You look at the overall EBITDA, overall way the PBT of the consolidated also going up. Okay,
but
so
that is
losses, we don't look at these as losses, but these are the investments. Like I said, whether it is Norton or any other company, when you start, first is to get the product right, and the revenue has to go up. That's why I gave the analogy of iQube. iQube development started long back. Now we have 3 variants of iQube. We have demand for 25,000, but there is a ramp up. So what is supposed to happen, and good news is, There are customers who are having 25,000 who are waiting for this product. The moment you give revenue, every other line comes down and it directly goes to the bottom line. So I think what is most important is we have to create customer delighting products, which we are good at, and we have to continuously make sure that we are able to deliver. The moment you start delivering it, you will see the consolidated numbers becoming better and better. That's exactly what we look at. But some of the investments, whatever we have gone into the future mobility areas, are for the future. Okay, they will start fructifying results in next quarters to come, next 4 quarters to come. That is the way we look at it. See, if we never started TVS ES or BT TVS Indonesia or even IQ, we will not be there today. So overall, I think that is the strategy the company has adopted, and we are very conscious. We look at which are the investments and which are the things where we have to look at and how do we grow the business. We look at it. Definitely we look at it.
Okay. So are you saying that some of the product development of TVS IQ was also sitting in this in subsidiaries, and that's why this number is looking higher? Is it the right way of looking at it?
I gave only an analogy of IQ. I gave you an analogy of only IQ. Every subsidiary has got their own product development, their own top line, their investments on people, investments on every element of that. So that is separate. I gave an analogy of IQ.
Thank you very much. This is helpful.
Thank you. Due to paucity of time, that was the last question. I now hand it over to the management for closing comments.
So first of all, sorry for some interruptions and sorry for the delay from our side in starting the call. I think we are pretty confident that with the kind of portfolio what we have today, starting from Apache, Jupiter 125, Raider, Ntorq, Radeon, TVS King, and the recently launched TVS Ronin and IQ. What is most important, we are able to see the customers are extremely happy on our product. The semiconductor situation, and thanks to the semiconductor suppliers, they are also now understanding and supporting us month after month. With these two, we are pretty confident, even though there are some challenges in the international market because of the economic conditions, we will grow ahead of the industry both in customer retail, in Vahan share, and also in the dispatch share. And we are confident that as a consolidated, we will move EBITDA quarter after quarter and stand alone with the operating leverage, premiumization, continued cost reduction. We will do better than the industry, and we will continue to delight all our stakeholders and customers. Thank you. Thank you for your interest in this call.
Thank you. On behalf of Batlivala and Karani Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.